Here we have the 30-minute price chart for Google, Alphabet Incorporated stock, ticker GOOG. This is the 30-minute time frame. So as we can see here, the stock had a very strong week last week. We saw some very short-term periods of massive upward buying activity. In particular, we can point to the Friday trading session where we saw highs uh, posting in at just above 190 after trading at lows below 188, 187.30 specifically. So we can see here that the moves higher have been fairly substantial, and this does come after a longer term period of gains that have been seen for Google share prices. Overall, a lot of the market is kind of experiencing this type of this type of trading activity, where we're just seeing extended moves higher. Apple would be a very strong name to point to recently. This has not been the case for every stock. I mean, we are seeing some stocks that are trading a bit more sideways. Amazon would be one example here. But Apple and Google in particular have really seen some strong surges higher, and it does call into question whether or not it's kind of too late to buy, or whether or not people should be waiting before triggering new long positions here. So overall, we do have to look at the indicator readings themselves as an early measure of whether or not we've started to become overextended here. The longer term fundamental outlook for Google does remain positive, and overall, the earnings valuation here is still favorable relative to many different stocks in the technology space. We're still trading, below, for the most part. Google has been trading under, its forward earnings multiple of 30. And this does suggest that it is a bit undervalued when compared to some of the other names in this space. But all of that said, we have seen some significant runs higher here, and this does suggest that it is a better idea to wait for a bit of a pullback after seeing these types of rallies. So in particular, what I would want to point to would be this overbought indicator condition that is currently seen on the 30-minute chart. As we can see, we did reach highs of roughly 80 on the relative strength index, just below 80. So the 70 mark is what would be considered to be overbought, and this does mean that we've traveled pretty far into overbought territory. It's not totally surprising given the upside move that has been seen here. Um, so overall, I would prefer to wait for a bit of a retracement here. I'd like to see this indicator reading start to move lower, so we can get a bit of a better price on the stock before entering into new long positions. Currently, what I would be looking at for a potential buy zone comes in at roughly 187.50. This would mark the highs that we're seeing closer to the end of June, roughly June 27, where we did see highs of exactly 187.50. So I would be waiting for a pullback here. This was really the breakout point, as we can see. So this is kind of a significant level for the stock going forward. And we are starting to kind of wane in momentum here. We're starting to kind of relax a bit as far as the tremendous amounts of upside buying pressure were concerned. So, currently I would wait for prices to kind of return to normal, return back toward their moving averages here. And by the time that occurs, all these exponential moving averages here are moving higher. So, it's more than likely that we will be seeing this purple line here, which is the 100 period exponential moving average. More than likely, we will be seeing this heading into roughly this 187.50 zone. And then I think that can be used as a potential buy area going forward. So, overall, if we do start to see declines here, the next level to the downside that I would be watching, if you wanted to maybe scale into a position, roughly, think about putting, maybe half of a position on near 187.50. You could consider, scaling in that way, and then waiting for a bit of a decline further into, let's call this price low here. Let's get to some exact numbers. 183.06 marks the price low from July 2nd. So July 2. So, I wouldn't have a problem maybe scaling into a third of a position at roughly 187.50, and then possibly another third of the position near 180, 183, just above 183, and then maybe stop out below um, this price zone here would be, yeah, I mean, this is the 180 mark. So you really could be stopping out here at just below 180, with the final third of the position coming in at roughly 182.20. So I would probably scale into the position like that. But at the moment, I wouldn't be buying the stock currently because we're starting to roll over here at upper levels. And we are also in overbought territory. All of that said, I would still maintain a bullish bias here because the longer term reading and the relative strength index remains positive. And then you do have the fact that this attempted downtrend in share price momentum was broken fairly quickly. So it doesn't look like moves to the downside are going to be able to sustain themselves for very long. Okay, so if we pull out to the Google weekly chart, we can get some price assessments here for potential upside targets going forward. It's better to look at the longer term time frames here because this really kind of allows us to take a longer term assessment and to see where the longer term standard deviation channels currently rest. As we can see here, there are some signals here which also kind of argue for taking profits if you're currently long. I can understand waiting for a move that's a bit higher because we haven't really moved into some of the psychological levels yet, like $200 per share. But currently, we are hitting the upper range here of the upper Bollinger Band on the weekly chart. And then, in addition to that, we have already overcome this first standard deviation price channel target, which came in at roughly just below 190. And we're already trading at 196. So the potential for further gains here does seem a bit limited. If we were to look into next week, we do have another upside price target that could potentially be seen at 207.35, roughly. Um, but we would definitely start to top out at that point. And if you're still currently long the stock, I would recommend taking some profits at that point because the moves that we've seen from here have been quite substantial. We were really starting from lows, sort of trend lows here, just above 130. So if we were to break above this $200 mark, you're seeing gains of roughly $70 per share, and this is a mega cap stock. So moves that are this substantial really aren't seen very often. And more often than not, they're possibly not sustainable. So I would definitely consider taking profits here relatively soon. If you wanted to wait for a move closer to the $200 mark, I guess I could somewhat understand that. But you do have to understand that we are becoming overextended here into the upper Bollinger Band, and we've already exceeded the initial standard deviation price target. So this would be the current market outlook for Alphabet Incorporated, stock ticker GOOG.